And so there's a lot of talk about recession. And the reality is that, you can always have the possibility of a recession. And so here's what a recession could mean for the housing market. Recession talk, as I mentioned, is all over the news. And the odds of a recession are really rising this year. And that leaves people wondering what would happen to the housing market if we do go into a recession. So let's take a look at some historical data to show what's happened in housing for each of the recessions going all the way back to the 1980s. A recession doesn't mean that home prices will fall. Many people think that if a recession hits, home prices will fall like they did in 2008, but that was an exception, not the rule. It was the only time we saw such steep drop in prices, and it hadn't happened since. And to be honest with you, most of that was caused by the lax underwriting guidelines we had for loans leading up to 2008. The data from CoreLogic, in at least 4 of the last 6 recessions, home prices actually went up. In 1980, they went up 6.1%. 1981, they went up 3.5%. 91, which is just before I bought my first home in 92, house prices went down 1.9%. In 2001, house prices increased 6.6%. In 2008, they went down 19.7% in 1 year. And in 2020, even though we were in a recession, home prices increased. So if you're thinking about buying or selling, don't assume that a recession will lead to a crash in home prices. The data simply doesn't support that idea. Instead, home prices usually follow whatever trajectory they're already on. And right now, nationally, home prices are still rising at a more normal pace. While home prices tend to stay on their current path, mortgage rates usually drop. Now listen to this during economic slowdowns. Let's take a look at data from the last 6 recessions. Mortgage rates dropped 4.2% in 1980, 5% in 1981, 2.25% in 1991, 0.63% in 2001, 1.13% in 2008, and 1% in 2020. So a recession means mortgage rates could actually decline based on the data, which makes everything more affordable. Now, I wouldn't say that you should expect a return of the 3% rate. The answer to this recession question is still unknown, but the odds have gone up in terms of us having a recession. But that doesn't mean you have to wonder about the impact on housing. Historical data tells us what usually happens, even if we are unaware.